channel. I am Informant. Today I will give you about 3 reasons why Ethereum price is pinned below $2,000. ETH's price is meeting strong resistance at the $2,000 level, and this trading metrics explain why. Headers of ETH market structure continues to be bearish despite the failed attempt to break the descending channel resistance at $2,000 on May 31. This 3-week long price formation could mean that an eventual retest of the $1,700 support in underway. On the non-crypto side, a number of equities-related factors are translating to negative sentiment in the crypto market. This week, Microsoft or MSFT lowered its profit and revenue outlook, citing challenging macroeconomic conditions. The U.S. Federal Reserve signaled in its periodic Big Book that economic activity may have cooled in some parts of the country, and the Fed is about to reduce its $9 trillion asset portfolio to combat persistent inflation. On the bright side, an institutional investor survey published by the Economist magazine showed that 85% of the respondents agreed that open source cryptocurrencies like Bitcoin or BTC or Ether or ETH are useful as receivers in portfolio or treasury accounts. From the macroeconomic perspective, investors are still risk averse, which could translate to a reduced appetite for cryptocurrencies. Ethereum still has a mountain to climb. The Ethereum network's total value look or TVL, the total amount of assets deposited to the network, has dropped by 5.5% since Ether began its downtrend 3 weeks ago. The network's TVL peaked at 28.7 billion Ether on May 10 and currently stands at 27.1 billion. Decentralized finance or DeFi deposits were deeply impacted by the USD Terra or USD, now known as Terra USD Classic or USDC. Stablecoin collapsed on May 10. All things considered, the indicator shows a moderate decrease, which is somewhat expected after such an unprecedented event. To understand how professional traders are positive, let's look at Ether's futures market data. Quarterly futures are wealth and arbitrage that prefer instruments due to their lack of a fluctuating funding rate. This fixed mode contracts usually trade at 5% to 12% premium to spot markets, indicating that sellers request more money to withhold settlement longer. This situation is also common in traditional assets such as stocks and commodities. over the past month. Others futures contracts premium has remained near 3%, which is below the 5 neutral market threshold. The lack of leverage demand from buyers is evident as the current 2.5% basis indicator remains depressed despite another 24% negative performance in 3 weeks. Fear of global downturn continues to impact crypto prices. Others crash to $1,700 on May 27, drained any leftover bullish sentiment and, more importantly, cost $235 billion in average long futures contract liquidations. Even though another price tested the $2,000 resistance on May 31, there is no evidence of strength from derivatives or DeFi deposits, according to the TVL metric. As investors, focus remains on traditional markets and the impacts of global macroeconomic worsening conditions. There is little hope for a sustainable price decoupling to the upside. Views and options expressed here are solely that of the outdoor and do not necessarily reflect the views of Cointelegraph. Ethereum investment and trading move in purpose risk is short code. Conduct your own research when making a decision. Okay. Thank you for watching my video. See you. Bye.